Rent eats up your paycheck before the month even begins. A weekly grocery run costs double what it used to, and global news is a constant stream of chaos. This chart shows two very different realities happening at the exact same time. While the cost of living climbs, the stock market is simultaneously surging, closing at an all-time record high for the 26th time this year alone. The financial system operates on a specific logic that rewards asset owners, and we are going to walk through the 5 exact steps you need to take to align your money with that logic. These 5 steps create a mechanical bridge across the divide, allowing you to stop being a victim of the system and start becoming a beneficiary of its growth. Step 1 is breaking a mental habit. You have to stop looking at your grocery bill or the evening news to figure out how the stock market is performing. The economy is a measure of jobs, wages, and the price of a tank of gas. It tracks how average people are doing. The stock market is simply the total value of shares in publicly traded companies. They are separate mechanisms. In fact, the largest companies often become more valuable by cutting jobs and raising prices. The exact actions that make your daily life harder are the precise things that make a company's stock price climb and enrich its shareholders. Imagine someone wins the biggest lottery jackpot in history, and the news tells everyone to go out and celebrate because we won. The only person who should be celebrating is the one holding the ticket. Look at how the ownership is actually distributed. The top 10% of households hold the overwhelming majority of all stocks. When trillions of dollars flow into the market, it pulls directly into this tiny top tier. Record high stock prices do not signify a healthy country. They act as a scoreboard, showing that a small group of asset owners is getting richer at everyone else's expense. Step 2 is auditing your savings. If you have cash sitting in a bank account paying 0 interest, you need to move it out. Keeping cash feels safe, but inflation is actively degrading its value. Every month that money sits idle, you are quietly losing purchasing power. Wealthy people understand this math. They move cash out of fiat currency and park it in hard, appreciating assets to protect what they have. Fear of inflation drives smart money out of banks and into the market. Holding on to cash out of fear is a dangerous financial decision because you are betting on a currency that is losing its value. Step 3 is maximizing your capital. Calculate your absolute baseline living costs and cut the spending that doesn't serve you. Frugality has a strict limit. You can only cut expenses down so far before hitting a hard floor of survival costs, but earning potential has no ceiling. The income you can generate to fund investments is limited only by your time and skills. You cannot shrink your way to extreme wealth. You have to build a high-performing income engine specifically designed to fund the purchase of appreciating assets. Step 4 puts that income engine to work. You need to open a passive investment vehicle like a 401k, a Roth IRA, or a standard auto-investing app. Relying on willpower to manually invest your money fails. The moment the news cycle turns negative, human psychology will cause you to hesitate and pause your deposits. The mechanical fix is automation. Configure the account to pull a set percentage directly from every paycheck before it ever hits your checking account. Removing your own emotions from the equation ensures that you consistently capture the market's growth, regardless of the daily headlines. Step 5 is choosing what to buy. Do not gamble your deposits on picking individual stocks. Instead, buy a broad index fund like the S&P 500. Modern investing operates as an automated machine. Millions of people deposit money every single payday, and index funds automatically force that cash into the largest companies, driving their prices even higher. Think of a company's total profit as a pizza, where each slice is a share you own. When a company uses cash to buy back its stock, it removes slices from the pan. This automatically makes the remaining slices wider and more valuable. Finalize your setup by selecting a broad market index fund as your target. Turn on the automation and lock it in. By buying the whole market on autopilot, you attach your wealth to the systemic forces and accounting mechanisms designed to drive prices upward. By executing these 5 steps, you've successfully shifted your identity from a consumer absorbing the costs of the economy to an asset owner capturing its upside. Staying the course will test your psychology. Markets will inevitably drop, and the instinct to panic and sell will be strong. The financial system does not pause for personal or economic hardship.
It simply continues compounding wealth for the people who hold on to their assets through the downturns. To prepare yourself for those drops, you need to know what happens just before a market crash. Click the video on your screen to see the warning signs, and subscribe to stay ahead. A record high in the economy is only a victory if you have built the automated systems to actually own the assets breaking those records.